It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, February 23rd, 2016. We have another exciting newsletter in store for you guys and gals. Tonight we're covering crude, S&P 500, gold, and of course the mighty euro currency futures, of course. Starting out tonight, we got crude oil. Crude oil's bearish this evening as it rotates inside multiple bear channels on the way to completing a measured move. Today's session ended smack right at the lows, which is far too cheap to sell here. We expect sellers to be taking profit. We'll be looking for a bullish correction before selling more tomorrow on the oil. E-mini S&P is blatantly, shamelessly following crude oil's lead right now with its own collapse off the highs today, which ended with a bearish spike in channel and just a few more ticks away from completing a measured move. This tells us sellers will likely be taking profit soon and be looking for a correction higher before selling more. Crude oil and the S&P are definitely following each other right now. Pretty easy to see. Get a plan for those in just a moment. Gold, the yellow metal, is bullish and rotating to the highs of a spike in channel on the way to completing the measured move target overhead. Buyers would love to see a trap low before completing the measured move because price is too expensive at these highs right now. We have a huge red candle off the highs, and ultimately for gold, everything is really hinged on whether or not we hit that measured move tonight or tomorrow. We're going to plan for the yellow metal in just a moment. Wrapping up tonight with the euro, the 6E, the currency futures contract, is bearish and range-bound this evening. And the 2-try rule, which we use in range-bound markets, tells us to be looking for buyer failures at resistance for the next selling opportunities tomorrow. Now, get a jam-packed newsletter in store for you guys. Before we jump into charts and go over the plan for tomorrow, I want to remind you the only place to watch the full-length video for our nightly newsletter is here on our trading blog. If you're watching the shorter video on our YouTube channel, make sure you follow the link in the description of the YouTube video. That way you can come over to our trading blog at sidewaysmarkets.com and get the full-length video covering all the different markets. Also, while you're here on the blog, don't forget, grab a free pass. Come out and test drive our live trade room as a guest for a few days this week whenever you're free. Right below the video, left-hand side, you'll see a spot to register for our nightly newsletter mailing list. Now, you'll never have to worry about missing another newsletter video ever again. All I need is your name, your email, and then make sure you check your inbox. I'm going to send you a verification email. Right below the video tonight on our blog, you can download, of course, all today's charts in tonight's video. How easy is that? Have all those charts ready for your own trading tomorrow. And of course, on the right-hand side, you can register as a trial member, not the same as a free pass, read member reviews, and of course, don't forget, we've always got someone standing by 24/7, 365 to give you guys some help along the way. Before we jump into charts, let's check tomorrow's schedule real quickly. Tomorrow's Wednesday, February the 24th. Now, of course, this week has been littered with news headlines. The Iranians, the Saudis, the Russians, back and forth talking about, can you guess? Oil, right? Absolutely. And of course, everybody's listening to these headlines right now. We'll talk a little more about that in a moment, but that may creep into tomorrow as well. Today was a good example. Today really had some news early in the session, but it was pretty much dominated by, first it was Iran, then it was the Saudis. We'll talk more about that in a moment. So keep your ears open tomorrow. I have a direct data feed from tradethenews.com in our trade room, so we get all the audio alerts and all the direct newswire alerts as they come out tomorrow morning. So we've been keeping a pretty good finger on the pulse of that this week, and we'll be doing the same thing tomorrow morning. We open up our trade room tomorrow morning at 8 a.m. Eastern time. For the rest of us, news for tomorrow, 10 a.m., 10:30. Two big news reports tomorrow, especially for oil traders. 10 a.m. is going to be your first news report. 10:30 a.m. is going to be the second and final big news of the morning. Those are the major reports to be aware of tomorrow morning. Just a heads up, if you're trading oil tomorrow morning, this is an inventory day. Our cutoff is going to be at 10:15 on Wednesday mornings, and I'll typically sit on hands until about 10:40. I usually do a 5-minute before and 5-minute after, but with that petroleum status report, it's inventory day tomorrow. So after 10:15, cut it, and then wait until after 10:40. And even after 10:40, I do strongly encourage new traders, stay away from this market after 10:40. The real hard part about trading after a big news event is you can't really practice it on a simulator. A lot of people get in trouble because they practice trading big news events, non-farm payrolls, FOMC, inventories for crude, right? It's on a simulator, you don't have to worry about getting filled. On a real live account, there's a buyer for every seller, and when you try to trade news on a real account, it's going to be a lot different. Bottom line is, you can make a lot of money off news reaction, but you can lose a lot more. And remember, if making $100, losing $100, us human beings, we are loss averse, right? So losing $100 is twice as worse as making $100, right? And most of us have already learned that lesson. So bottom line is, after the news report comes out, unless you are experienced with this, right, be careful after 10:40. I always consider Wednesdays after 10:40 to be, or after 10:30 to be gambling, right? So careful tomorrow. And again, remember, for all those newbies out there that are trying to trade news, you're not going to be prepared for it if you're practicing on a simulator, and it's a really expensive hobby to be practicing on a live account. So just be careful. As you can see, I have personally made, I think, every possible mistake. I think I've made every mistake I can possibly. I shouldn't say that though. Knock on wood. But I've made quite a few mistakes in my career. That is definitely one of them, and I look forward to giving you more easy ways to save yourself from all the pitfalls that most new traders fall into. Let's jump right in and get started tonight on crude. Crude oil is bearish this evening as it I'm going to go with bearish, right? Just a little bearish this evening as it rotates inside multiple bear channels. And you can see those multiple bear channels I have marked on the chart right now. We have a measured move down at 30.32, right? On our way down to that measured move. That measured move may be adjusted if we correct higher tomorrow's inventory. So we'll wait and see how that measured move. Right now, the measured move's at 30.32. But if we do spike higher today, which I wouldn't be surprised at all because that big news candle pushed us lower. Bottom line is, today's session ended right at the lows, which is too cheap to sell here. So we'll be looking for a bullish correction before selling more tomorrow. News headlines got today's market moving lower when Iran called, the Iranians called the Saudi-Russian, the production freeze deal a joke. That's actually the word he used. Color me surprised, right? I guess language travels pretty well right now. Which was then, I think was the most important. It was then followed by comments from the Saudis who said they welcomed more supply. That's a quote. They welcomed more supply. There was a definite arrogant tone to the way the Saudis came in and commented at the conference today. And again, we're listening to it as it's coming in. In my opinion, remember, the Saudis are the ones, they can. What does it cost them? $5 a barrel to produce a barrel of oil, right? Here in the U.S., it's 22 to 27, right? So, sub 30s, we're going to the red for U.S. and most non-OPEC producing nations. These large OPEC nations, they can easily let this price go down, and they've been very, very candid, all the bigger OPEC nations. They're going to drive this price lower, run out all the small producers, hopefully bankrupt the whole shale oil industry as it stands right now, and then they'll be the only game in town, and price will shoot back higher. I think they learned a lot of lessons from the 80s, right, and the oil crumble there. And I think the Saudis right now sounded very, very arrogant today, the way that they commented afterwards, almost as if, I don't care, whatever you want to do. They basically commented saying, we're going to allow this market to balance on its own. I don't know, guys. This, the boy that cries wolf, how many times can the boy cry wolf? How many times in the past 2 weeks have we heard the Russians come out, right? Even the Iranians were talking about it a few days ago. I'm looking at this now going, okay, you piqued our interest with the production freeze last week. Prices shot higher, came right back down. Rollover saved your behinds, right, from getting sub 30s this time last week. So now here we are back staring right down the barrel of 31. I've got a measured move in the 30s. Prior low is at 28.46, 28.5. It's really easy to see what's happening right now. Every time the fear fan, the fan comes out to get the fear levels higher, it just keeps getting sucked back down in. So I don't think anybody's being caught off guard by this lower price. honestly, if you ask my opinion, the fact that it sounds like everybody's on to this right now makes me even more patient for a bullish correction before I sell it. You know, when you go to the office in the morning and everyone's talking about oil at the water cooler, you know you probably should be going in the opposite direction. The problem is bubbles, right, and irrational price action can last a whole lot longer than us educated technicians, right, can predict it. So for as of right now, sell, 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 sell. We just can't sell here. We got to sell up off these lows. So, excuse me. Sellers are looking for a correction higher, back to the news candle around that $31.82 to $32 a barrel, and the buyers need to wait for a new higher high and a pullback to hold before they can even consider, right, buying this market. So ultimately, let's play that game. What if price goes higher? What if price goes lower? We have a multitude of channels to work with right now. This is not my favorite bear channel. It doesn't really explain rotation back to the highs, right? So not my favorite of the bear channels, but I wanted to put it on there because the low of that move off that news just came so conveniently down to that low. It did rest on yesterday's or 2 days ago's lows, last Friday's lows. But the reality is, though, that's going to be the first of two bear channels. And, of course, the sellers are going to want to sell up around the high of that bear channel, right? So that bear channel tells us to sell the high, wait for rotation. Sorry, man, I'm full of tricks today. Coughing in your ear, whiting out the screen, horrible jokes. Let's keep going. So next channel is going to be, this is what I've got drawn up here. This one looks a lot better. This one has rotation. This one has rotation from high to low, low to high, right? And so the next move lower should be a completion of that rotation. That's going to lead me into in just a few moments. We'll talk about this in a moment. But that rotation now, it's a big deal, right? That's a big deal. It's going to want to send us back to the low of that channel, right? It's going to be interesting to see what happens here. Those are the two channels I see. Another factor on this is a flag. We have a bear flag. Right? It's a very clear bear flag. It broke down at the lows, right? That's going to be a piece of this puzzle as well. That leads to the measured move, right? Bear flag, spike in channels, triangles, wedges, right? Once we go from the lowest point to the highest point, that's your measured move. Again, we may see a correction higher because, of course, the next piece of this puzzle is going to be this API number. Right now, this move lower did happen at news, and usually when news is responsible for breaking a technical level, such as a bear flag, right, as I mentioned earlier, that API number is going to be a price magnet, right? The high of that red candle, right? It's going to be just about, 31.85 or so, 31.84, okay? So the high of that red candle is going to be defended. You have to assume there are a lot of traders who sold that move, or they sold on the way down in that move. And of course, their stops are going to be hanging out above the high here and above the high here. The bottom line is big drops usually mean big pops, right? At least in the short term, that big red candle, we'll be looking for a price at the very least to get up off this low, up and around this news area, right, and then right back down. Let's play that game. What if price goes higher? What if price goes lower? If price goes lower, this should be interesting. If price goes lower, we have to assume a couple things. First of all, if price goes lower, look for a double overshoot at that channel low, then for a spike back higher. Okay, look for a double overshoot at that major channel low. If price goes lower, though, it's probably going to finish the rotation down to the low of that channel, right? So it's very easy to see how this price, which does not need to correct higher, let's be honest, it's just I want it to correct higher because that's where the most reliable trades are. Remember, you want to sell high, not sell low. Right now we're low. We want price to come back up a little bit so we can get more reliable trade to sell it back down. The problem we have here, though, is that we're trying to complete that rotation, right? And that channel rotation, like I said before, we may end up finishing that job. Now, look for a double overshoot of that major bear channel, and that's a decent short-term counter trend scalp back to the upside. Just wear your helmet and make sure you wait for the proper signal after a clear double overshoot. Double overshoots are real powerful reversal clues, right? And we'll see.